Hello, well, welcome back to another video on my channel. Today we're looking at market environment, ranges and trends. So I've actually heard some feedback that some of the videos are like a little bit too intense. So we're going to try and just demystify it just a little bit. Okay, so as you can see, we've got market environments or a range and a trend. And basically a trend is a price consistently moving up or down. So an uptrend is characterized by high highs and lower lows. And these are formed by patterns known as swing highs and swing lows. So you can see different kind of trends here. Here's swing high, swing low. A swing low basically occurs when the price makes a low on the second candle, with the first and the third candles not dropping below that low. Conversely, a swing high happens when the price peaks on the second candle and the adjacent candles don't surpass the high. So, but with an uptrend when the price pulls back and forms a swing low, it often signals a good buying opportunity, as the price may move higher, and a downtrend identified by lower lows and lower highs. We look for swing highs during short-term rallies to potential selling points. Yeah, so we can see an uptrend here, and then a downtrend here is perfectly demonstrated on the chart. It might be obvious to some people, but there's some people it might not be. So then let's talk about ranges, because that's quite an important part of this. So with ranges, in a range of market, the price bounces between specific highs and lows. These act as resistance and support levels, which are really good to trade. Range of markets are also called sideways or bracketing markets. In these conditions, we're not chasing big moves, but employing mean reverting strategies. This approach assumes that the price will eventually return to its average. The mean could be a moving average, a volume-weighted moving price, or a specific price level, which you can all look up if you need to. However, the risk with mean reverting strategies is that the market might start trending, leaving us on the wrong side of the trade. So for example, here we can see Bollinger Bands in a ranging environment forming right here, and that's showing the sideways trend within these two channels for the support and the resistance area. So anyway, in conclusion, you should focus on trend following or mean reverting strategies. That depends on your personal trading style and preference, and markets tend to range more often than they trend. Significant profits can be made during strong trends. Understanding markets trending or ranging is really essential for selecting the correct strategy. However, you need to stay adaptable and keep on learning to enhance your strategy over time. Yeah, thank you for watching. Please like and subscribe. This is obviously not a financial advice, and there's a disclaimer in the description. Thank you.